I think you've heard me mention, like, I'm seeing these drone companies in like Texas, like doing deliveries for food. 25 fast food restaurants each take a corner of that warehouse, have all the food dropped off in the middle every day, all the potatoes, all those things. A quality stuff tends to stay A quality, right? If you're a bank or you're a medical and you want like the most quality building and the most quality spot, that tends to still get the numbers. But the other 80% of the market, right, tends to devalue. I mean, just talking a little bit about the robot stuff, like Elon's talk, energy is going to become the currency. And I also think there's going to be a ton from this. I think there's going to be a ton of cost inflation in energy. We've already seen it the last 3 years here. It's been like 30%, 35%.
When you have a lot of real estate debt, you constantly have to think about maintaining liquidity, right? That's a thing we have to talk about all the time. Is banks want to make sure you have enough cash. But basically, there's a sale coming in January, and then we have a big refi coming in January where we're pulling a bunch of cash out of a property.
To weekly headlines and Project Pearls. In headlines, we unpack this week's biggest stories and share how they're shaping our own personal wealth building decisions in real time.
Then in Project Pearls, we'll pull back the curtain on our real estate deals and share the wins, the challenges, and the learning opportunities.
We have an awesome show today. With me is the Sultan of Smart Money, Dr. Reed Faldet. Reed, how's the family?
Family's good. Family's good. Just managing the newborn stage. It's crazy and wild. Luckily, my wife is taking the brunt of it at night, but I shouldn't say luckily, and luckily for me, not necessarily for her. But getting readjusted to the craziness of a third child. Yeah, figuring it out. Slowly figuring out the routine. How
Yeah,
about you?
I remember it was that little like, okay, so we have three now, so I'm gonna handle this one, but you got to handle the other two.
Yes.
Right? That was the difference.
It's
Uh,
it's
uh,
not man on man coverage, it's zone. It's
it's
zone coverage from this
so
point
how
on.
are we gonna match up here?
Yep.
Uh, we're good. We don't usually get sick, but man, like rarely, like our kids. It's great, but like we got hit with something. So it's just been one kid, throwing up, and then the other one, and then like we got the whole chest thing going on too. And I mean, I think, I mean, we definitely have the most like tardies and like missed days of school out of the entire grade school. Like I can almost guarantee, just between like it's not like sickness, but it's just like in general, like we just don't prioritize conforming to like the timeline of the school system, I guess. We just kind of prioritize what we want to do.
Yep.
And so yeah, it's just how it goes. So um okay, what's new in the news this week, Reed?
In the news, I think you were gonna discuss kind of some of the.
Mine?
Yeah, I don't have
Okay.
anything. I don't have
Oh,
anything.
you want to steal
I
my
did.
thunder? Okay.
Yes,
So
I didn't do my
so
homework. I didn't do my homework
okay.
for the week. So you're up.
So, all right. So our headlines this week. The biggest thing for me is I always want to listen to really smart people and figure out where the world is heading so I can align with that, right? So like right now, I think you've heard me mention, like I'm seeing these drone companies in like Texas, like doing deliveries for food, right? And so like my brain goes, okay, drone companies are delivering food. Like, are we going to need DoorDash? Probably not, right? So DoorDash's days are going the way of Blockbuster, right? In the future, right? So that's one thing. The other thing I start to think about is, you know, yes, in retail, you're going to need certain retail, right? Like, how do you provide medical services still? Like these kind of things. Like there are things in retail that are going to be sticky. The most efficient way to deliver food, okay, if I'm McDonald's or whatnot, like you're not selling the experience when you're McDonald's, you're selling the convenience and price. Okay.
Mhm.
And so if fast food is some of the highest paying retail tenants, and if they're delivering convenience at a good price, the best way to deliver convenience at a good price is to have a giant Amazon warehouse, have 25 fast food restaurants each take a corner of that warehouse, have all the food dropped off in the middle every day, all the potatoes, all those things, get them processed, get them to each corner, right? Panda can make their food, McDonald's can make their food, Taco Bell can make their food, and then everything is controlled like by an app and drones are delivering all the food, right? Because it's a standardized process. So like I'm like, okay, so if this is going to happen, then these QSRs, these restaurants, these fast food restaurant retail spaces are going to slowly go dark as this type of stuff happens, right? And what happens is even if like medical's still there, it creates vacancy in the market. And when there's vacancy, you've seen it with office right now. Tenants can demand concessions. Prices will come down. The A quality stuff tends to stay A quality, right? If you're a bank or you're a medical and you want like the most quality building and the most quality spot, that tends to still get the numbers. But the other 80% of the market, right, tends to devalue. And so it's not just like Amazon that I'm like anti-retail on, right? It's more like I start seeing these other things and I'm like, hey, we're gonna have less of a footprint in here. So unless I have like an A quality spot, I'm in general selling retail. That's my first kind of like headline, and this is based off of drones actively delivering packages, food for people in some of these metropolises. If you want to look up the company that I was looking up, it's called Zipline. Check them out. They're in a few markets, like in Texas, and they're about to hit Seattle, which is, 4 hours for me, much more close to home. So, any thoughts, Reed, come to mind when I mention this?
I think so. QSR is quick serve restaurants for people that aren't used to that lingo. But so one thing I think about is even if retail, you're right in the sense of that I think restaurants will continue to maybe shrink their blueprint and not have maybe the sit down, right? We've seen that with many restaurants. You don't have you can't dine in, you can drive through, right? And so even if retail, the retail quick serve restaurant doesn't go away entirely, they're going to shrink their blueprint, which does the same thing in terms of driving up more vacancy, right? Because they occupy less of a building. But I always just think that I can imagine that drive-through is still going to be present to a certain extent. But yeah, I don't know. I think that's an interesting future that you
Y-
painted there, and I can see it. More of an
Yeah.
industrial flex
I
than
mean,
retail.
drive through, you see it, right? Sometimes just seeing the sign makes you want to eat it, right? That's on your drive. Yes. So there is that like marketing piece.
And it's immediate. You're
Immediate.
on the road.
But with drones, I mean, it's like 15 minutes, right? Like they have the food ready. And if they have like steady demand throughout the day because they have one central location that they're doing the drones through, it's not like they're making your hamburgers once you order, right?
Mhm.
They're having a constant supply of 100 quarter pounders every 30 minutes being ordered, right? So they're just constantly making quarter pounders. So it just like things go fast.
So just going back to your biggest takeaway from this is still you would be only bullish on Class A retail, right? Like if you're going to maintain ownership in retail, you're going to make sure that it's more high-end Class A retail.
Like the best locations, just think Class A office buildings, right? If you're the flagship office building that all the people want to be in for some reason, okay. Same thing on retail. Like, what does that Class A retail look like? And it's typically like, medical office next to the hospital, right? Because the hospital is the anchor there, right? That draws people there, and then the medical goes around it. The busiest street on town, that's an intersection with the other busiest street in town, right? Those corner spots. Brick, big glass, like nice
Mhm.
retail, I just think if you're not one of the top 20%, the top 10, 15%, it might be time to sell retail. No, 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 this is macro, right?
Yes,
Obviously,
you're
each
thinking big.
market's like
Yep.
real estate is micro, is market specific. So don't like apply what I'm saying to every property out there, but
Yeah.
just as you're trying to strategically plan ahead, like we're moving to flex retail. I told you, I think we're looking at doing that. And when I look at flex retail, I'm like, okay, yeah, can a robot swap out an Amazon employee who does the exact same motion, the exact same thing? Yes. Can a robot go into somebody's house, diagnose what's going on with their electrical or their plumbing or HVAC, and then, get into this old house and fix it, right? Th- that's not like a robot thing, right? That
Yeah,
that's that's a
that's a
that's way
further.
down the line, right?
Yeah.
That's probably 20 years down the line. So and then so I'm like, okay, flex industrial, I feel good about for a while,
Mhm.
right? So you just got to kind of anticipate where the world's going and align with that.
Yep. Yep. No, good
Good.
tip. Good tip.
Okay.
Yeah.
The second one that really jumped out to me is I love listening to Elon Musk. Like the guy's brain is just on another level, right? He breaks down things down so simply to to their core. He talks about fifth principles, but like they're their core. And the one thing that really struck me is the last couple of weeks on his podcast interviews he's been doing, he's been talking about like the robots, right? How they're really going to replace labor. And as the robots replace labor, he's also talking about currency. Okay, like what's like modern currency look like? Well, he's been mentioning energy, right? The 99.9% of the energy, potential energy that we can harvest here on Earth is coming from the sun. So as we focus on future energy needs, AI computing power, powering all these robots that are going to power our workforce, right? That's going to be a massive energy need. Where is that energy going to come from long term? The solar, right? As we ramp up, it's going to come from the sun. So he's talking about like if productivity, like you and me, we use AI a ton, right? So if productivity is coming a lot from AI, which takes a ton of energy, and then AI is coming from these, I mean, productivity is coming from these robots, which take energy. The real currency is going to become energy,
The rate
energy,
limiter. The rate
create
limiter.
output, right?
Yep.
If I want to create a cheeseburger, how much energy does it take to create that cheeseburger? If I want to create a new Xbox, how much energy does it take to create that new, because you have robots doing the mining to get the materials to build the plastics, to build the semiconductors, to build the remote controls for that Xbox. Like it really like energy is the core fundamental piece that leads all this, right? And one example of that we're already seeing is Bitcoin, right? Bitcoin mining. What does it take? Well, you got to have a bunch of computers, but once you got your computers, what does it take? It takes energy, right? And
Yep.
your returns are based off of like how the price of Bitcoin, but how quickly can you mine it? How much energy you're putting in, right? The output, input, output. So like when he's explaining this to me, this is ringing true to me, right? I'm hearing this and I'm thinking,
Makes sense.
energy,
Yeah.
right? This is going to be it. So I don't have any actionable like, hey, do this. But when you're thinking about investments, you're thinking about allocation of your money, you're thinking about allocation of your time, like
Mhm.
understand these concepts and like help have these general macro concepts help guide your path over your life and you'll just do better and not get blindsided by things that you can't see today, right? You got to see the future so you can kind of mosey yourself and position yourself well.
Yeah, it's a lot of pattern recognition, and then it's like projecting out forward, right? Like you see
Yep.
it in other things in the past. So the better you can recognize patterns, the better you can get ahead of them or influence them potentially, like within any micro environment. Big picture, of course, but then you got to bring it back to micro, your specific market that you're investing in.
And I also think there's going to be a ton from this. I think there's going to be a ton of cost inflation in energy. We've already seen it the last 3 years here. It's been like 30%, 35%.
Is
I,
demand. Yeah.
it's not going to stop, right?
Yep.
So we need to think in terms of energy being a chief bottleneck. Yeah. Um,
Yep.
Project Pearls. It's been a couple weeks, Reed. I'm sure you've learned about 10 things between the pace that we work. Anything pop up for you?
Yeah, so my son is like exactly a month old this week, and it was in the hospital that I was closing on our first RV park. If you remember us kind of chatting
Yeah,
about that a little bit.
yeah.
So my wife wasn't too pleased with me, but I was, she's there on the bed laboring. I'm like, hey, I gotta take this call, sign this thing quick. It just closes can be kind of wild sometimes. But anyway, so it's been a month, and we just got our first round of distributions from there's just a three person partnership on it, and it was
Yeah.
rock solid. We're looking at like 20% cash on cash return so far if we can just maintain occupancy. So it's just like strong cash flow, strong depreciation. I'm like a little bit like this is too good to be true kind of thing. So like I'm setting expectations that it's going to taper off a little bit, but we'll see. We're looking at another RV park that kind of has similar numbers. And so we'll see if we close on that before the end of the year. The other thing is we have a potential sale coming up in January on one of our multifamilies that we got an offer on. Basically there's a sale coming in January, and then we have a big refi coming in January where we're pulling a bunch of cash out of a property. So what I wanted to kind of discuss a little bit is like when you're thinking about doing a big cash outlay for an investment, whether it's $100,000, $500,000, $1 million, whatever it is, when you have a lot of real estate debt, you constantly have to think about maintaining liquidity, right? That's a thing we have to talk about all the time. Is banks want to make sure you have enough cash. And so if I have a good opportunity coming up that requires a decent amount of cash, I also got to think of how is that cash going to be replenished in the short term, right? And so if I'm thinking, oh, I have a sale coming up in January, I have a refi coming up, right? I'm going to have this much more liquidity. Yes, it's easy enough for me to say, yep, I can basically use that cash now because I'm going to basically replenish it here in the next month. And so it allows me to maintain liquidity as it is. So I wanted to hear your thoughts on that.
Yeah, the first fundamental principle there is, debt at the right price is going to amplify your returns, right? So if you're putting in X amount of cash on a deal, 10%, 30%, and the bank is bringing the rest and it's at a low enough interest rate, that's going to amplify your returns in life. So, okay, that's fundamental piece one. Fundamental piece two is like what do banks want? They want to de-risk as much as possible. And that's what they care about, right? Is risk-adjusted returns. And so, how do they de-risk? They look at your balance sheet, like how much you own, which isn't the issue here. The other two things they look at is the cash flow on the property, and they look at your liquidity. So, you have to always manage your liquidity. You have to outlay money for deals when they're in front of you and not lose them, right? But then you have to refill that liquidity. So here's a key quote. And like this is a good one that always sticks in my brain. Banks only want to lend to you when you don't need the money. Okay,
Yep.
that's it. Banks only want to lend you when you don't need the money. So if you show them, man, I got a ton of liquidity, I'm doing great, they're like, yeah, I'll lend you. No problem. If it ever looks like you need money for a deal, right? Then they're not interested in lending to you. And you're like, well, I only want to borrow when I need the money. If I have the money, like I don't need you, right? So you really have to present this front of, hey, I'm doing very well. Here is
Yes.
this liquidity I have. Here's this cash flow coming in, from all my other properties, from my dental business, or from whatever coming in. Like I'm solid. If you would like to be my partner on this, right? And
Yep.
so that's how you kind of have to think about it is you can't be needy. You got to be slow. They don't like moving fast either, banks. So you got to be slow, steady, financially strong. That's
Mhm.
what banks want in a strategic partner. So if I am going to outlay and put myself in a liquidity position that I don't like long term and banks won't like, I also need to match it with a liquidity plan that is coming soon after.
Yep. And that's what I was referring to. And for people to kind of think about that dollars out, short term dollars back, right? Like I know I don't even need the sale and the refi to go through. Technically don't need either of them to go through, but it definitely strengthens it either one. Strengthens my
Either
financial
one.
position to either one. So
When you're wealthy, okay, and you have the opportunity, you don't have to do things, right? You're doing things because you want to. It's best to do like Elon did, right? Where he borrowed from his Tesla stock to buy Twitter.
mhm.
Right? You have a liquidity stock portfolio of index funds, let's say whatever that number needs to be to appease your banks based off of your size of your loan, right? So if they want you to minimum have 10% liquidity, 20% is even better, right? So if you're getting a $20 million loan, you really want to have like $4 million,
Liquid.
for liquidity, right? And the
Mhm.
easiest way to do that is have it like in an index fund thing just sitting there. right? So they always know that. Now, that doesn't really solve, like, I always feel comfortable having a million or two just sitting around in case a problem happens, right?
Hmm.
And if it's in index funds, you don't want to be like buying and selling that stuff, right? Index fund investing is long-term investing. It's not short-term investing. So that's the hard part is like, I think if I were to do it, I'd probably, like if I were to optimize it today, I like it just on paper, I would probably have half my liquidity needs in index funds to meet their goals, right?
Yep. Yep.
And then I'd have half of that in cash, we earning whatever 3-4%. That way I'm always comfortable because I know if like shit hit the fan, I could
You don't have
just
to liquidate.
I got the cash right there,
Yep.
right? Or have a line of credit option off of my index funds. That's another piece,
Yes.
right?
Yeah.
You have
Securities back line of credit. Keep it
securities
pure.
backed line of credit. The piece with the securities backed line of credit too is if I pull it, oh, what was my key point on this one? When I when I pull a securities backed line of credit, um that is kind of like that's the ideal strategy for the short term options you're talking about. You get a really good deal that comes across, right? You don't even need to go less than cash. You just borrow off your S block, right?
Yep.
Do that, and then like you refi that property 6 months later, right? You refi that property 9 months later, you pay off your securities back line of credit and you go whole there, right? That's the
Yeah.
ideal way to do it.
Mhm.
The hard part is when you're building up wealth, I just think of the compounding return curve, right? Like I need to have as much cash deployed as possible in the highest return asset classes in tax mitigated strategies, right? If I'm doing the highest returns, most amount of cash outlaid in the tax mitigated strategies, my compounding wealth curve is going to be at the highest ratio there, right? And so it's finding that sweet spot where you can sleep at night, you are making the banks happy, right? Those two pieces, but at the same time, just keeping that thing going.
Yeah, to your point, that curve, right, where it gets to be kind of exponential. But the key is like you need to decide where is the speed bump or where is the potential like catastrophic event that could
Yeah.
bring you back down. So what good is going super fast vertical if you drop back down just as fast? So you have to know kind of your ledges on the way up, like kind of your safety stops, where you don't get ahead of your skis, meaning like you're putting all your cash out there, right? You're maximizing leverage to maximize your returns, and then you have nothing, no safety net to bail you out when a problem arises because they always do. So there is this, like you have to find that sweet spot. So liquidity is super important.
Liquidity is super important. I think it's time in life, right? Like you look at all the tech guys who grew these big businesses, or anybody who grew a big business, they put it all on the line and they put it all on the line for a while, right? And once they hit it big, then they start hedging, right? But until
Yes.
they hit it big, you got to put it all on the line. And so that's why we always talk about like it's much easier to do this when you're younger, right? Your kids, you're not like supporting your family, like those types of things. And so that's why you see all these tech entrepreneurs, right? Their brains are passionate, they're young, their brains are flexible, and they don't mind putting it on the line because they don't have a bunch of kids to support. And so that's why all these tech entrepreneurs, 20s, early 30s, once you start getting into your 40s, it's like, hey, I value that security for my family. I want to stay married. I want to hang out with my kids. And so it's a different mindset. And that's when people go to non-recourse debt too,
Yeah.
right? They get to the point where they're just like, look, I don't need this recourse debt. I know it's a little better terms. I know I can make a little bit more money, but I don't need that stress in my life. I
Yes.
don't need that. I don't need one deal going bad, ruining the last 20 years of work I did.
Yep. And you have to decide that for your personal mental health. It's important. I've been in those positions where I'm like, when you're to your point, when I'm 27 years old and I'm just like, I'm taking all my liquidity and I'm buying this property, right? Like that, I had to do it at the time, but I don't have to do it anymore. So I'm not going to, you know. So yeah, yeah,
Uh, Let's move on to do you have a second Project Pearl, sir?
Project Pearl. I mean, I think that kind of covers everything. I'll kind of give updates when the sale happens and some of the structuring around that, and maybe the cash out refi will be kind of a fun one to talk about once we close on it. I'll do more of the numbers, but how about you? What do you got? What have you learned this week?
Yeah. So, it's interesting. I love humanity. I love like understanding how people's brains work. It's real fun. So, people are emotional, right? They make emotional decisions. So, we had the all the wood on our building. It was all framed out, everything, roof on there, started looking good. The minute you put those windows on, all of a sudden, emotionally, it becomes a home. It becomes attractive. Okay. And that
Yeah.
really, like when we put those windows in, we did like the larger black windows. So I think they look good. So you got to understand your potential tenants' mentality, right? And I just want to reemphasize for folks when you're prioritizing the 1,000 things that happen when you build a building, the windows are the eyes to the soul of a building, right? So do not chintz on windows. Do not like windows are important. The second thing is, profitability happens with your attention. You are the special sauce. You cannot delegate that. Okay.
Mhm.
So there's a appliance group that usually most people use, most developers use in town. We like to call everybody. We like to do our due diligence. We like to get at least three bids. We called Home Depot. Dude, so like these fridges are like I want a little bit nicer fridges, right? Two French doors, a freezer down below.
Yep.
I always like to go one tier above, right? I want people to be like, this is a nice fridge. Best bang for your buck, right? And I mean, these lists on these things are 2,500. I mean, I don't know what they actually sell for. I have to look, maybe like 19 or something. But like we went to the distributor and they're like, yeah, we buy these for 1,100. You guys got Home Depot offering $840 per fridge to you. It's like, I'm not even going to make a counter offer. Just go say yes, right? And you just got to understand how things work, right? Like Home Depot, headquartered like Atlanta, goes to like, I think they're headquartered in Atlanta, goes to like these manufacturers like GE, and GE says, hey, we have like 10,000 fridges of this model. Like, how much can you guys sell? We think we can sell 8,000 of those. Okay, great. For 8,000, we'll give them to you for this price, right? Because G's trying to get rid of them, right? And Home Depot's trying to do volume. And corporations are dumb, right? To them, it's just numbers, right?
Mhm.
Whereas like a local group needs to like hit their profit margins, needs to like pay their team, like all those things, right? Home Depot is just massive numbers. GE's just trying to get rid of massive quantity, and Home Depot is trying to offload massive quantity end of year, right? So if you're trying to make profits, this is how you make profits, right? This is where the profits come from.
Yep.
Is this kind of like hands-on piece. The second thing that we had done is, I always try to find the strongest team members, right? So I'm not carrying everything. The who, not how, right? I found an architect really good, right? Driving the projects. I just civil engineers, I've never found one. I've never heard of anyone in town who's like, yeah, this guy is on it, right? There's always challenges. And I'm not blaming the civil engineers because they just come from different industries, different way they think, how they're trained. It's just not like they're not driving it like an owner. Okay. But this architect, he's very good at driving. I like his vision. I like his design. So he's got his aesthetics. And then he also works well as a team, like driving project.
Like integrating it all the way to the completion,
Yeah,
integrating
getting
the
it going.
design, bringing in. Yeah, I got
Yeah.
you.
So you got contractor, civil, and then you got architect and city or county, right? Those are usually the parties, and they can just go in a circle death loop if there's not people driving it, right?
Yep.
So, we send out for bids. And for this next project, okay, and this is one of the income restricted ones, right? We're doing like community impact, right? It's like a community thing. And so instead of giving us a deal, I broke down his bid compared to his last one, right? And I broke it down because when you just look at the number, you're like, oh yeah, okay, that number seems about right compared to the last one. But we don't do that. What we do is we break it into its parts so we really understand it. So I broke out his bid into like two pieces, one for townhomes, one for apartments, and then I took the apartments piece, and they also have like design engineers that they pay as well. Okay. And so you kind of have to like match apples and oranges. Like, are they using the design engineers this time, or is someone else paying for the design engineers? Right. So you got to make sure it's apples to apples. And then I break it down per apartment unit. And so the architect, like, literally, it was like an 80% increase in fee. Okay.
Almost double. Almost double.
Almost double.
Yep.
And
For a project that happened how long ago compared to the past project?
yeah, I'm talking 7 months,
Okay, not even a year.
not even a year.
Yep.
So we're in the same year. What I'm just saying here is anybody that comes to you and it's easy, right? Like that dental salesman that just comes to you with like an easy deal,
Yep.
like your profits are made through your diligence, right? You have to slow down,
Controlling costs.
break it down into the pieces, right? And hold people accountable.
Yep.
Because as soon as they think they're in your house, right, they're going to take advantage of that. And this is where the money is made. So it's that most people just do what's
Yep.
easy. This is when you need to slow down and break it down. So,
Yeah. It's funny because it's just like I was just doing this. I do this with everything as well because I also want to keep them honest and I want them to know that like you'll never get one buying me. So don't try because people try and I've caught them many, many times, right? And you call it out, like basically just ask for enough detail where they have to break out things and they basically catch themselves in the lie and then change their quote for you. So I don't want to go into specifics because I think we kind of hit this pretty hard, but I agree. Like you save 60 grand on fridges, you save $1 million in architecture fees. There's your return,
there's
right?
your
Like,
return.
yeah.
That is
So,
your profitability, right?
yep.
Otherwise, you're going to be average with the market, right? Which is whatever, 7% a year, right? On your profitability. Yes, and you also need to have a stable. So you can't align yourself with one horse because you never know
Yes.
what that horse is going to be. You want to have a strong team, but you always want to have two to three strong options so you're never stuck. Um,
Yep.
I think the second point I want to hit, these are good ones, is we just started construction on the 78 unit. I'm calling it right now the preserve. It's because it's on the nature preserve, right? 530 acres, which is great, right? You can't make land, right? So having like an urban development on 530 acres is rare. So I'm super excited for this. And on one side we have this very old, historic, beautiful retirement community. Like independent living, memory care, brick, like gorgeous, right? On the other side, we have a little trailer park, right? So we're gonna put up the hedges, we're gonna put
Yeah.
up the trees, like this kind of section out the
Lock it.
trailer park. Yeah.
Yep.
And we go in there, we start tearing up all the trees this week, and we get to the property line, and the trailer park has put like one of the trailer park tenants put their entire shed, those sheds you order from like Home Depot, I don't know, they're
Mhm.
10 by 12, literally entirely on our property. And then like three of the trailers are on our property. And then like maybe 3 or 5 feet. But they're supposed to be an easement of like 5 feet from the property line. So they're supposed to be like 8, 10 feet further in than they are. And then
Mhm.
there's a couple RVs. And you can get into a pissing match with a neighbor, right? And get all legaled up and you
Yep.
shouldn't be on our property. But how does that serve you? Right? Legal, only the attorneys win, right? And so what you want to do is always approach this from win-win, right? So the trailer park wins having a nice new apartment development next to them, right? It makes
Sure.
them look even nicer, right?
Sure.
And
Yep.
so they're actually excited to have us. So when I and then we start with relationship, not task focus, right? So I call the property manager. He's local. Corporate's over in Seattle. They own like 100 properties, right? So corporate probably
Doesn't
doesn't
care.
give a crap,
Yep.
right? But this property manager does. So this is my who. So I get to know him, really nice guy, got a bunch of kids. His kids went to the same middle school I went to, right? Like super cool guy. And I'm just like, hey, look, I don't want to get into a pissing match. I'm not interested in any of that. It's like we want your tenants to have a great experience. You know, we have to have this retaining wall so all the dirt doesn't fall on them. Safety, right? This shed probably needs to go. He's like, shed is no problem, right? And I'm like, okay, what about these RVs? He's like, we can move those, no problem. I go, what about mobile homes? He goes, well, they have to have a tongue, and if they don't have a tongue, we got to find one. They got to have wheels, right? And then you
Yep.
got the foundation, those cinder blocks, and then there's plumbing. I was like, oh wow, that's a lot of stuff. I was like, look, we don't want to move these trailers that are like 3 feet under our property line unless we have to, right? But I am
Mhm.
concerned about safety while we're building this wall for them, right? And so I was like, okay, great. So you just got to talk through things instead of like you're on my property line, piss off. Right? Like I feel like so many people go there, like, oh,
Yep.
I'm so offended that you were over my property line. Look, there were woods there. If I were those guys, I'd want to be like close up in the woods and using the woods as
Yeah.
much as possible too. Like I don't blame them, but
Yep.
I think people need to understand that you can create really cool synergistic relationships with your neighbors and you both win, and to always focus on that, not the scarcity mindset.
Yeah. No, that's a good tip. I mean, I've been there many times with the neighbor is across, completely encroached upon our land, and we have to have that conversation. And I'm always like you, right? Where I always start just being friendly. Hey, do you mind doing this? We have this issue, whatever. But sometimes it escalates, not from my doing, right? But from someone just digging their heels in and being difficult. But yeah, it's I always try to start level-headed, and then oftentimes I'm not the one that escalates things. But sometimes you want to start from that like calm, collected state because then they see a change of state when you need to, right? Like
Yeah,
you have to put the pressure on sometimes. You have to get serious so people know you're serious. But I always think, why can't we just handle this cordially, friendly, right?
yeah.
Keep it going. So I'm with you.
It's like your kids. If you're not like flying off the handle all the time, when you start raising your voice, they listen, right? Hey,
Correct.
like I need you to pay attention.
Yes.
Um,
Cool. Cool. Well, does that wrap up Project Pearls for us this week? You got
mm,
another one.
I think one other thing that really, when you're creating a product, real estate is really a product, right? You you're really selling a vision to folks. Okay. So as I'm describing at Home Depot, because our development's like not far from Home Depot. It's probably like a 2 minute drive, 1 minute drive. And the women helping me at Home Depot that help do all the kitchens and appliances and blinds for homes and apartments, I start telling them what I'm building here, as we're just kind of talking about it. And they're like, one of the ladies is like, we moved here from Minnesota like 7 years ago. Like, this sounds really good. I'm interested in having me and my husband move in there. You know what I mean? Like, so you got to understand is people are buying a product and they're buying a vision, right?
Mm.
So don't ever forget that. If you can differentiate and sell a vision, you're gonna do well.
You're gonna bring the right people along with it because or
Yep.
attract people to it that
Yep.
are going to be willing to help fulfill that vision or build that.
Yep.
Yeah.
Yep. I
Yeah. Cool.
think I got some other stories that are pretty hilarious, but we don't need to get into those this week.
We can trickle them. We can trickle them in. We can trickle them in over time.
dealing dealing with the state in other municipalities, it's like it's just interesting how things come across sometimes, and sometimes you, like you said, you got to know when to push, and you got to know when to just kind of go with it and build relationships, and maybe you get what you want next time. Not always this time. So. Okay. Well, that's our headlines and Project Pearls for this week. Make it a great one.
Thanks for joining us today. If you want to connect with us directly and keep the conversation going, join our private Facebook group. We'd love to have you in the discussion. If you want to see or listen to any of our other shows, you can find them on our YouTube channel by searching Dental Real Estate Partners. Or if you prefer to listen in podcast format, look for us on your favorite podcast app or streaming platform.
Content from Dental Real Estate Partners is for informational purposes only and should not be considered financial, legal, or investment advice. All investments carry risk. Past performance does not guarantee future results. Always consult a qualified professional. Dental Real Estate Partners is not responsible for outcomes from actions taken based on this content.